Good evening or daytime, Russell traders, wherever you may be. I'm David of TradingFibs.com. That's TradingFibz. To give you today's daily Russell recap for May 24th, 2013. You may find more information on my website, including daily recaps, trading rules, and supplemental links. To get things started, a little orientation. In the upper left-hand corner, I have my 5-minute range bar set, including the 25-minute open range support resistance lines from monthly and weekly pivots. On my upper right-hand chart, I have a 534 exponential moving average with Heikin Ashi bars. Blue colors signifying up signal, long red signifying down into the short. I also have in the lower left-hand corner, I have my daily pivot and daily gap lined out, including the standard S1 and R1 and up above. I also plot my Camarilla pivots on the chart as well. In the lower right-hand corner here, I have my 1-hour open range versus the 25-minute open range, which include the post 1-hour support and resistance lines. So let's get into today's market and see where price went today. As some of you have seen from my posts, I'm a trader that observes the 25-minute open range with discipline. Most of my moves will either be underneath the 25-minute open range or will be above. As you can see today, I had two steps, one at the beginning of the day at post 30 minutes. You will see also my times are Pacific time. And then I had a second entry, which was later in the mid-morning, around lunchtime for you East Coasters. And the rest of the day drove all the way up to actually close the daily gap. If you had gotten anywhere near the entry at the low today, which actually happened to be at the 1-hour open range at the bottom over here at 971.10, happened to be the lowest of the day, and a ride all the way up to the top of the day would have given you about a 120 tick move, almost as much yesterday. One of the things I do, I also post open ranges for other markets. For those that like to not trade the Russell but follow the indices, you'll see we had similar moves today on all 4 indices. I also plot any future equity. Here's crude. I had a slight move on the soybeans today, and as well as Apple pretty much kept within the range. When you look at the entire week span, you'll see that there were opportunities available up and below the 25-minute open range. It is not the only indicator that I use to get in or out of a trade, but you see very similarities in between both. You have a lot of sideways action, and I will tend to have hands off inside the range. It is not until I get outside the range that I will trade. Here you had a nice move on the Russell yesterday as well with the other indices, and gap down on the crude yesterday. Here you had still a nice move yesterday. Notice how price does use those up and below lines for support and resistance. Nice move yesterday right off the top. Here's the beans, a nice jump yesterday all the way up above the 25-minute open range to eventually come down and close right at the top. Here's an example of Apple throughout the week. Similar situation. Below, had a nice trade on Wednesday. Above, nice, just had a little patience. Wait till price moves and then break above, and gotten it 439 to 445, almost a 6 points on that one. And then when you keep inside the range, it's pretty much a hands-off day, and that's what today looked like. So let's get into why I took the trades I took today. The market opened, gap down for the daily gap traders. You did really well today. You just got in maybe at the entry and rode it down for about 50 ticks if you had that big of a size that you can sit, and then just rode it up all the rest of the way. Would have done you nice. I would use probably a Heikin Ashi to time my entry for that. But again, my method's a little different in my entries there. I'm not strictly just a gap trader. Market open within the 25-minute range was open. Econ data was very light today. It's a pre-market, pre-holiday, Friday, and end of the month, so I didn't know what to expect. I don't know what to expect any day. But as soon as price started to move here under the 25-minute open range, that was my signal using market internals. Looking to the short here, I then look at my second chart, which is my Heiken Ashi chart. I already saw a price breaking down over here under the 25-minute open range. So there's my 7 o'clock bar. I got a good portion of that bar that's a sell signal there in combination with a nice red bar forming here. It's 7 o'clock as well. That's a 7 o'clock. And that would be 7 o'clock, so it would be 9 o'clock Eastern or wherever you are. And then entry. Downside target was really based on just watching market internals and watching my Heiken Ashi candles. As you can see, this is a sell signal. That's a sell signal. I'm sitting in this. I'm sitting in this. And the 1 hour open range, we're only at 7:05 here. And the truth is, I once this blue bar was forming, and not to say that price wasn't going to come and maybe come back down, but at that point, market internals were supporting that move, but tick was not showing that. The tick was coming back up. I had already had a 3 red, pretty much under 0, but once tick started coming back up, I decided to take off one contract, leave a runner on. You can see here that market breadth was actually all negative for most of the trading day until it turned around, which was around my second entry. Here you had an AD line, which was really in the negative, so really mixed on market internals. So this line here coming down at 645, 715, we're starting to come around on the green, and so I decided to come out of this trade on the blue uptick on the Heiken Ashi candle here, and the runner didn't go anywhere, and I had to stop at break even. One of the other things that I also do is I draw a Fibonacci extension line. So taking the high above the 534 crossover there, coming down to a low here, and looking for downside targets. I had a notice almost, and that's okay, almost, but almost came down to fib target 2. So really drawing the Fibonacci extension, my ultimate target would have been down here at the fib target 2. However, some people like to simply trade off the EMA crossover. That's not a specific entry for me, but as you can see, fairly nice entry here with all sell signals. Heiken Ashi, this is pre-open 1 hour, and if you rode that all the way down, a lot of overnight selling here too. Very nice bars forming on the range bars, and eventually 5 stayed under 34 all the way down, and until the market decided to turn back up. Again, hands off for me when it comes to inside the range. So my first opportunity outside the range was going to be, as you can see, this is the first bar here at 840 that starts to break that 25-minute open range, but really shows sideways action here. I would like to see another bar close up, but what I noticed is that my Camarilla pivot L3 line was right here at 980. And with such a close distance between the pivot and Cam L3, and then I also have a pivot gap line here, which sometimes, most of the time, I have hands off. But today, if the market internals showed upside, if I stayed up above L3 here, I was willing to take the entry. And so 840, I was still underneath the 25-minute open range, both on a 1 hour and 25-minute open range. So that was a double line there, and I was not going to enter until at least I had a nice Heiken Ashi bar above this green line here. So you could see the 980 Cam L3 line, and so Heiken Ashi did come up here but ended up turning down. And so looking on my 5-minute bar, there was the bar. So I had a nice signal there. I had a nice signal here. I could have taken that entry, but looking at market internals, there was a stall there on the tick chart. I decided to wait, and it was a good decision. I still found support here at the top of the 25-minute open range. Price ended up coming up here nicely on the nice solid bar above the Camarilla pivot L3, and in conjunction with my Heiken Ashi bar above the L3 was all buy, and I stayed in and I rode it all the way up to the daily gap, which was over here. Had a daily gap right up here, and it pretty much just about closed it out. Almost here, I actually ran it by a couple ticks and took my contracts out, and I left the trade. As you can see, price did come back down to L3 for support, and eventually came all the way back up and closed that daily gap and open gap right up here. I had a trifecta of support resistance up here, and so I knew that if price did run up here, that would have probably been the eventual target for the day. I did have a weekly S1 that did show some support or resistance here between the 25-minute open range, but again, I don't trade within that range. So a really nice day, set up down here underneath the 25-minute open range, waiting a little bit on the chop here, signifying that I wasn't going to get in my trading room until I got above Camarilla pivot L3 here, and eventually did take off for 40 ticks, which was a nice move. Also drawing a nice Fibonacci extension here. Not the greatest of fib setups that I like, but again, price came all the way up to 983.9, and that's where I placed my target. And so you can see here, I had a target here at 983.9, which was I going to have my runner taken off. 4 contracts of the day, 2 to the downside, 2 to the upside, 1 off after halfway up, and then my last target was all the way up at the daily gap. And so I closed that out and left with 4 contracts for the day, $460. $460 that you didn't have yesterday, right? Is that how you look at it? All right, so that's it for the Russell recap for May 25th. You can, again, find more information at my website, tradingfibs.com. I hope everyone has a great weekend, a nice Memorial Day weekend here in the U.S. and for wherever you are in the world. Enjoy yourselves, and we'll see you next week.